Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, a super ominous signal has fired, very dangerous for the markets, and it's not what you think. We're going to talk about it in this video, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob, sometimes the best signals are in the least likely spots, and this one's pretty interesting. Tell us about it.
Yeah, so I know you're going to show the signal, but there is a crossover, between the Dow and the transports that it's only happened. I think this is like the third time in the last 15 years. And each time this has happened, it is then followed by not just a selling in the market. It's really a massive, strong, quick, deep sell-off in the markets. And I hate to use the word crash, but it will feel like a crash when you're in it. But it's going to be a reset of asset prices, and this thing has almost like 100% hit rate. So Phil's going to show that to you in a second, but I'm going to show you what leads up to it. And if we could just pop this first thing up here, this is the trucking index. This is what these guys get paid to move freight around. It is absolutely collapsing down to the COVID low rates. And this is not good, okay? Because it might be great, hey, you're shipping the stuff for cheaper, but you're not going to have the drivers to ship it, because it basically makes it impossible for an independent driver to take a load. And this is really, if you just keep following it backwards, you get to the ports, and then from the ports, you get to the shipping companies shipping stuff over from overseas. So we're basically seeing, we've already seen a collapse of import and export prices. We talked about that last week. Now we're getting the data that's basically showing the collapse of the amount of goods that are being imported and exported. And it goes all the way back to China. Remember, everybody that said we're going to go into a new bull, just like happened in 2008, China didn't really see a crash like we saw in the United States. China pulled everybody out of the 2008 great financial crisis because they just kept, pumping. But they can't do that this time, and China's not coming out of its funk. And so that's why you're starting to see, that's why iron ore prices are down, steel prices are down, copper prices are down, why oil can't get back over $83, and it's translating into all their export industries. And so it's affecting transport, which affects goods, which then prices, and I think you're getting the drift. But this sets up the signal that Phil wants to show you, because the transports are getting crushed. We're going to probably see many, many, many trucking companies go out of business here over the next 12 to 18 months. And so, Phil, I'm going to throw it back to you so you can show this really cool chart.
Yeah, so let's transition over to that. And like Bob said, transportation is the lifeblood of the economy. It's the pulse of the economy. And as the economy starts to slow, these are the things that we look for. So, and that's why fundamentally this signal works that we're going to be looking at here. So what we're talking about specifically is when we have the Dow Jones Industrial Average down Monday through Friday. That's what this green band is here, Monday through Friday, all red days. And if you look at the transport index, it also suffered the same anomaly where it was down all 5 days as well. And here it is Monday through Friday, down all red days. So when this condition happens, you have to take notice. And the reason for that is it's only happened twice in the last, since 2010. And I marked that off on the chart here. If we look on the S&P 500, and we can zoom out here. All right, so there's your two instances on the chart, and we'll zoom in on each one. But you can see like the large drop. Obviously, this was COVID. Interestingly, it happened ahead of the big COVID crash. The other time was at the end of July in 2011. So let's zoom in on that. All right, so zoomed in here on the end of July 2011, and you can see here a pretty decent drop. And this is what we're afraid of here. You know, if you're in trades or in options or leveraged in this situation, you're going to get crushed. Okay, and especially in the situation that we're in, because we think that we've got, you know, a lot more to go. In fact, probably taking out last year's low, and this could be the start of that. But you can see how big of a drop here. This was a 15% drop, okay, back here very quickly. This is a daily chart, and you can see over the course of 5, 6, 7 days, a very, very quick drop. That's a big move in the indices, a 15% move. All right, now we can look at what happened in right before COVID. Okay, so end of February 2020, and we had the same condition met there. We had a couple days of maybe you could call it a drift up, and then whoosh, you know, we're down 30% on indices. These are massive, massive moves. Anytime you get any, you know, 15, 20, 30% moves on the indices in percentage terms, those are massive, massive multi-billion-dollar moves in the market. And so here we are again with that same setup going into next week. Now, you guys know this week's OPEX, so things tend to pin. We don't really get huge sell-offs during OPEX week typically. Next week might set up for this drop, and so it's something we got to be very, very careful about. Again, this is an anomaly that doesn't happen very often, but when it does, has very negative consequences for the market, Bob.
Yeah, and you know, so we're talking OPEX week, and this, you know, we're looking tomorrow. Usually is also flat to uppish day, but it's a transition day. Thursdays are down, so we really have to watch what happens on Friday to see if this is going to start early or not. But this is something to be concerned with, because this is also tying in with the Treasury ready to have to making tougher decisions on how to run the government here with the debt, and the debt meetings are not going well at all. So, you know, we haven't forgot about the scary story we told you guys yesterday. You know, we have that one stored up, ready to go. But you combine what's happening here with the transports and the Dow with what's happening here with Treasury and funding, and you know, we're setting up for a perfect storm. And I'll tell you, I will be absolutely shocked if by July 4th an event doesn't happen. I'd be massively impressed with the ability of the market players to keep this market on an even keel over the next 6 to 8 weeks.
Yeah, I totally agree. All right, guys. Well, that's going to do it for this episode. Please let us know your thoughts on this. Are you positioned for the downside? Let us know in the comments below. Otherwise, we'll see you on tomorrow's episode. Please hit like and subscribe and smash that notification bell and set it to all if you could. Take care.